record run out. It's busy news morning, and Phillip, Statler, and I were trying to figure out and sort through what we needed to tell you first of all. It is time to check in on your money and see how things are going on Wall Street for you. And on the phone is Phillip Statler from Statler Financial Services. Phillip, I'm sorry, that's what I get for playing a short record, right?
That's right, man. And especially with today when there's just so much going on. And after yesterday's brutal bloodbath on Wall Street, I mean, everything was down over 2% yesterday. And and I thought we were going to continue that way. But since some of the economic numbers have come out, we've seen at least some of the indexes start to turn green.
Well, that's good because yesterday was absolutely El Stinko. I mean, the Dow was down a full 2%, down 633. Standard & Poor's lost, holy crud, 99 points. That's 2.5% down. And the NASDAQ fell by 355 points. That was over 2.5% down. I think offhand we're starting to head into what looked like it could become a correction until we got some decent news this morning. The good news was not the gross domestic product. That was the number that you and I were expecting to really move the market this morning early on. And we grew in the fourth quarter of last year at a 4% annualized rate. And your sources said we were expecting better than that, weren't we?
We were. I mean, depending on who you looked at, it was somewhere between 4.3 and 4.4. So that was a miss on GDP. I think there was probably some high expectations based on the third quarter number bouncing back so hard. But so I think it's going to be interesting to see what that does going forward.
Yeah, and a 4% growth rate would normally be considered pretty good if you assume we got back to something close to a normal GDP number after the recovery in the second and the third quarter. I mean, okay, fine. But 4% was not what the market expected. First-time unemployment claims, the other regular Thursday number, that was a bit of a beat. I had the market expecting 875,000 first-time claims. What did we come in at, 847? So it was a modest beat and a little bit better than expected.
Yeah, it was. It was better than expected. You know, it depends on who you looked at too. Again, Market Watch had it coming in at 875. The Street.com had it coming in at 882. And in any case, it was better than expected. And I got to tell you, Dave, when that number hit, we did start to see, that's when I started to see the green ink on the indexes. So that was a number that was truly unexpected and really made the change this morning on the futures.
I suspect that a lot of the analysts were thinking about the same thing that you and I have been saying with all the shutdowns in California and New York and whatnot, that we've been waiting for a shoe to drop and see a really big number, and it just hasn't happened during this last spate of shutdowns.
No, it hasn't. And then the other part is I thought, well, we would continue from where we were yesterday as, you and I have been talking about, well, maybe it's time for that 10% correction to come popping along. But doesn't seem to be any follow through, at least as of right now. Now that could change throughout the day.
I was going to say, we always caution people, one day does not make a trend, but it does look like we might be getting some relief today. And it's kind of being led by some news on the issues that we're actually reporting quarterly earnings on. I know you got a whole passel of surprises, and because it's such a sheaf of papers, I'm going to let you drive the truck. What's the first one on your list today?
So let's go through the three airlines that reported first, because let's face it, they have been under some major pressure from 2020. So the first one out of the box is American Airlines. They had a better than expected fourth quarter. They only lost $3.86 a share versus the $4.11 they were expected. Revenue came in above forecast. They did post for 2020 a $8.9 billion loss. So that was a big number. However, they are up now. So there's some indication that there may be some short squeezing going on here too, because they're up 43% this morning.
Yeah, that sounds like somebody covering a short, doesn't it?
Well, it sounds like people are buying, trying to get people to cover shorts, and so I find that interesting. That's a big jump on that airline. So we'll have to keep an eye on it.
Especially when you see $3.80 a share loss in a quarter being good news. That's one of those coffee spitting moments that.
Exactly. So let's go down to Southwest. which seemed to fare okay during the pandemic. I mean, they of all of them, they came out across top in terms of customer service, but they did lose $1.29 a share versus the expected $1.68. So better than expected there by almost 40 cents. They the revenue though did fall below estimates, and their loss for 2020 was $3.1 billion. So that was a pretty big decline for them. See if I can find the price. But they are trading up this morning, 4.6%. That's so good for them. And then the next one we have is JetBlue. We don't talk about JetBlue very often, but they're
on the other from America, and they're kind of on the economy end away from American, so it's a good contrast.
Yeah, it is. They're a little bit more expensive than the Southwest and some of those, but they had, again, they followed along with the rest of the airlines, smaller than expected loss for the quarter. Not as, I mean, a little closer than the other ones though. It's about 15 cents a share less than expected. Revenue though was ahead of expectations. They're getting a nice little bump this morning too, up 8.4% before we get going. So that's the travel
world. As big as the loss covering numbers on American, but it still looks like it might be covering something when you go up 8% and only lose a few $1 billion, right?
Yeah, and that's a good number for them. So maybe we just kind of keep with the travel industry here a little bit, Dave. So we had the Las Vegas Sands reported, the resort out in Las Vegas. They did lose 37 cents a share, and that was 5 cents more than what was expected. Revenue was also down more than expected, so they've gotten beat up a little bit there, but they are trading up today almost 2%, up to $50 a share right now.
Cool.
Yeah, so
bunch of household names coming out. What are some of the other ones? I know we're talking about our favorite social medias and our favorite electronic companies too today.
Yep. So let's go to those because in case we run out of time. So let's go to Apple first. Apple had the best quarter I think they said they ever had. They earned $1.68 a share. They were expected to only earn $1.41 a share. And get this, revenue came in well above expectations, surpassing $100 billion for the first time ever.
Whoa.
Yeah. Huge number.
They're going to celebrate by buying all the kids at the factory a new swing set.
Probably not, because the stockholders, there's something in there that there's some fly in the ointment or somebody's taking profits or something, because they're down 1.7% this morning.
Yeah. All right.
And then, so then what's another big stock we talk about? Facebook. Facebook beat also. They beat by about 66 cents a share, came in at $3.88 a share. Revenue was well above expectations, but they did warn. Now they had a little warning here that this year, 2021, is going to be a challenging year for them because of Apple's planned privacy changes. And it's going to make it more difficult for Facebook to target you and I, the people that have iPhones. So that may be good for us, but not good for Facebook. They are trading up 1.25% this morning.
No, they're going up anyway. Yeah, the whole thing with Facebook is the fact that cross-platform, they get a really good read as to what our interest levels are, and they can tailor ads real well. If Apple kind of locks them out of everything, it's going to be an interesting life for them with that micro-targeting they're so famous for.
Yeah, it is. So let's get to another big name that we've talked about quite a bit, Tesla. So Tesla reported. Now, they missed. They missed by 21 cents a share. They came in at 80 cents a share. Revenue did beat what Wall Street expected. And so they did not quite get the number of vehicle targets that they were expecting. And they did not provide the number for 2021 of what they're expecting. So they're trading down a little over 4.6% this morning.
Youch. How about one more before we have to break?
All right, so one more. What do you think? Let's look at Comcast came in. Comcast earned 58 cents a share, which was 8 cents higher than expected. Revenue beat forecast. So they had a pretty good quarter. They're going to raise their dividend by a whopping 2 cents a share. But everybody's loving it. They're up for almost 4.2% this morning.
That's a company that owns about 80% of what we watch on the TV lately. I'm glad they're able to make payroll. Once again, yesterday it was an off day on every index, and I put off with a capital O on it 45 minutes before we opened this morning. I'm seeing some changes in direction early on. How are we doing before we throw real money around, Phillip?
You know, Dave, volatility has definitely been here this week. And so folks need to understand how much volatility means and what it can do to their portfolio. So right now, the volatility has changed even today as the morning has progressed. The Dow is now up almost 0.6%, $169. The S&P 500 is up almost 0.4%. And the NASDAQ is still trading down, but it's only down 0.25%. I've seen it down as much as 1% this morning. So it's trying to get back. And get this one, the Russell 2000 up 1.25% this morning.
Wow.
Yeah.
Volatility.
I tell you. And then let's look at the commodity side. Silver's getting a nice bump this morning, Dave, up 2.9% to $26.12 an ounce. Gold up 0.5% to $1,857. Crude oil is making its way back up, heading towards 55. It's up 0.6% to $53.17 a barrel.
Ooh, that's up considerably from yesterday morning, isn't it?
That is. It really is.
Overseas markets, the Asian Rim markets pretty much looked at us yesterday and headed for the hills. They were all down well over 1.5%. It was not a fun day for them. Europe's kind of doing what we're doing. They're turning the corner. They're off, but not by very much midway through their trading days. They look at our futures and go, what the Sam Hill are they doing over there on this side of the pond? Phillip, we've mentioned it 2 or 3 times while we were going through the numbers. This is a really volatile time. And if I'm getting close to retirement, that's about the last thing I want to see. How do I find you to find out where the risk is in my portfolio?
You know, Dave, you're right. If folks are 5 to 10 years out from retirement, or they're already retired, it's even more important. You know, controlling risk is the one thing that we can do. Give us a call at 863-382-0037. Go to my website, statlerfinancial.com. Join us this weekend, guys, for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on the Highlands News Talk, 730.
All righty, and back here tomorrow morning to tell you what the Sam Hill went on today, because we can only take a guess at this time in the morning. We'll tell you for sure tomorrow about this time on Light FM. Fair enough?
Fair enough, man. We'll talk to you then.
Take care, Phillip. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. Weddings, sports.
Hey, folks, again, I want to thank you for joining us. Yesterday was what a day. Today, we'll have to watch it, see what happens. Again, remember, there's only one thing that you can control within your portfolio, and that's the amount of risk that you have. Give us a call, and let's look at your portfolio to determine how much risk is sitting there that you're not necessarily sure of. Give us a call again at 863-382-0037, or go to our website, statlerfinancial.com, where there's a link to our calendar right there. Hey, have a great day. I look forward to seeing you again tomorrow as we close out the month of January.